joining this session today. We're going to take a different approach. We're going to look at how we can improve profitability in a dealership, but rather than go from the approach of, let's look at semi-fixed expenses or how can we change pay plans, I kind of wanted to take the approach of let's look at what happens in the office in a couple of areas where I've seen in my experiences where if we could improve some of the processes, we would improve profitability naturally. Before we get started, I want to make sure that make it clear, this is interactive. I understand that we have a wide range of people with dealership experience, from very little experience to dealers, CFOs, and seasoned professionals that are on this call. So there's a wide range of experience, and so I want to make sure that everyone understands what's happening here. So some of the terminology I use, industry specific, if you don't understand it, I can definitely be happy to explain it, the terms, or dig into other areas deeper. I left a little time for that so we could be interactive as we move along here. So let's get started. Okay, so like I mentioned, I want to talk about how the processes impact profitability. I focused in this webinar in two areas, the deal flow and then the accounts payable function. Those are two areas where I've worked a lot in recently and have found that there's a lot of opportunity for us to, if we could tighten up the processes, we could improve our profitability. And then I want to talk a little bit about the consulting services at the end, about what we have, and then how to move forward with the consulting services if you're interested in doing that. Okay, so the deal flow. So traditionally in a dealership, again, it's my experiences with the stores I've dealt with all over the country. Traditionally, deals start at the sales desk, and they end up going to finance, and then they make it up to the office to be posted in accounting. I've also seen a recent trend where you kind of get rid of the sales and finance and turn it into one function. So you have one person that handles the entire transaction, from the sales, the finance, all the F&I products, and so forth. And I think the reason for this is to help improve the speed, right? And then you're dealing with one person the whole time, because the number one complaint from customers is how long it takes to buy a car, how much time they spend at the dealership. So if you can cut that time down, certainly would help the process. I don't know that, I haven't necessarily seen it be extremely successful, but I haven't ran across it very much, having the one person, one function set up. But either way, however you do it, finance is your last stop. And so before the paperwork comes up, this should all be complete, right? That's a perfect world. Everything comes up to the office completed, and we just have to post a deal and send the contract in, and we're golden. But unfortunately, that's not the case, and especially when we have trade-ins and their lien payoffs, those are where we end up with a lot of the issues that I've seen. So before we get into the detail of the process, I just want to, again, cover what's usually in a deal jacket. So there's quite a bit of information that goes into it. Most of the stuff is pretty standard. Most of it comes to the deal jacket when it comes up to the office. Most of it's there, it's in order, but there are a few issues that don't, like I mentioned with trade-ins and lien payoffs, that we have paperwork issues with. So we're going to cover those, but you can see there's quite a bit here, and we'll get into that. And I want to mention, so the way this is going to work is we're going to talk about the issues and then the costs, and then I'll offer some best practices on how to improve your processes. Okay, so here we go. First polling question.
All right, our first polling question here is going to be a true or false. Traditionally, deals start at the sales desk and work their way to finance before making it to the office to be posted in accounting.
Yay! That was an easy one. Okay, good. Nobody got it wrong. All right, so the next area I want to talk about is in the deal jacket, what the most common items that are missing and what I see. Okay, so these are the most common missing or incomplete items in the deal jacket that I've run across in my experience. So missing assigned power of attorney, then the payoff of the trade information is not correct. Trade titles, and then the we owe or the due bills. So those are the promises we made to the customers after the sale, that they can come back in and get some repairs done, or some service work done, or some whatever we promised them, whether it be adding a sunroof or giving them a free oil change or whatever it is. It's those are the four items that I see the most problematic. So, we don't really talk a lot about the costs of misplaced paperwork, but there really are costs, and we're going to cover them here. So, missing power of attorney. So the time spent contacting the customer. So what you're going to see here, the theme of this is time is a huge factor here, and then CSI. And we know how important CSI is to us. I mean, our factory programs are tied to it. Our ability to obtain inventory oftentimes is impacted by CSI. So if you're upsetting your customers and you're impacting your CSI, you're hurting, obviously, your ability to work with the factory at the maximum capability. So that's why we need to get these processes straightened out, make our customers happy, and instead of just blowing through the paperwork, let's fill it out right the first time. So I'll get into that a little more later. Incorrect payoff of trade information. So this one really bothers me, and there's so much time spent in the office contacting the bank, getting the right amount. So even if the paperwork's filled out, but maybe it's not filled out correctly, we send a check in. Well, we get a notice that it's not paid off yet. It was short paid. So now we have to take the time to issue another check, find a check signer, mail it off, and then again, wait for the title. One of the issues also could be the trade-in value. So if you put the wrong amount down, you could actually impact if the payoff, if there's an issue with the payoff compared to the ACV, it could actually impact your trade-in value. Again, delay in obtaining the title and the aging of trade-in. So the vehicle's sitting on the lot. A lot of times, as you guys know, when a vehicle hits the lot, the salespeople get really excited about it. But as it sits there for a few days, the excitement wears off, and eventually, as it ages, the ability to get good gross on it, front and back, is diminished significantly. So it's sitting there without a title is doing no good to anybody. And then again, you have to you have to upset the customer. They even get a notice that their vehicle hasn't been paid off, and they think it has been. Anyhow, it's just not doing it right the first time creates a lot of headaches going down the road. Okay, the next area we talked about was missing or skipped titles. So this one always got me, because oftentimes you get a junk or a trade-in that you're just going to send to the wholesale, send to the auction or to a wholesaler, and you get the comment from the sales department, well, they're just $500 vehicles, but we end up spending $500 doing the research and trying to trace this title down, whether it's been skipped or just can't get a duplicate for some reason. Now you have a $1,000 vehicle, and you sell it, you're going to wholesale it, but you're not going to get paid. So they don't pay until they get titles. So we'll talk again about how to maybe make this more streamlined, but this is an issue that I run across quite a bit. And then again, the aging of the trade-in, as it's sitting there, we don't have a title, it's sitting there and it's aging, and it's doing us no good. The next area were the we owe and the due bills. This is an area where I see a lot of sloppiness too, because you write down, you promise something to the customer, you write it on the due bill, you put it in the deal, and then there's no cost on it. So how do we know what's supposed to be charged to the deal? Are we getting the cost into the deal right? Now, is our gross right? We get a charge down the road. We've already paid sales commissions on the original deal. Now we get a big repair bill, 60 days later or 30 days later, and are we charging back the salesperson? We pay commission on it. So getting these right is really important. Again, these I find to be really sloppy at times. Some stores do a great job of it. And again, you throw it on a schedule, and now the schedule could get out of control because it's not being monitored. We'll talk about how to mitigate that problem. And then again, upsetting the customer. Customer comes in to get work done. Nobody knows what's supposed to be done or hasn't been properly documented. And so you end up getting an upset customer. And then another comment I just wanted to make is, as most of you know, is that, if you package a deal and don't present it to the bank properly, a lot of them charge you fees and then to resubmit, and you end up chewing up any reserve maybe you had or any money made off product. But again, paperwork, huge, lots of costs that we'll miss out or that we're going to incur if we're not careful. Okay, so before we move on to the best practices, let's go with the next polling question.
All right, the second polling question here. Incorrect payoff of trade information can result in, and you have your multiple choice options here. Bob, can you explain what CSI is?
CSI is a customer satisfaction index. So it's a way that the factory measures how well you take care of your customers. There's also something called SSI, which is Sales Satisfaction Index. And so it relates to both sales, or it could be service, depending on how the factory treats them. But either way, the dealers do get graded on the sales function, and that's what that index is all about. So when you go in, you take your car in, or if you buy a new car, you ever notice how the salesperson or the service advisor will say, you need to, if you are not going to put completely satisfied on your survey on every answer, please give me a call. That's because the factory knocks them down a grade or whatever for not getting completely satisfied. And some of us don't like to say we're always 100% happy. There's always room for improvement, right? So, but the factory doesn't take that into consideration a lot of times. So.
Thank you. And for everyone who is answering the polling question, you're correct. 95% responded with E, both A and B. Okay,
best practices, deal flow. This is what I found to be the most effective way to get your deal. If you're having a problem with the deal flow or with paperwork, what you do is, as the deals come up, you use zero tolerance, and so it could be the minor, smallest thing. Maybe you're missing one signature on something, or paperwork isn't filled out correctly, or you're missing one part, like you're missing an odometer statement or something. What I would do at first is zero tolerance. Kick the deal. So that means send it back to finance and have them complete it and send it back. And before you even start posting a deal, you break it down and you make sure that all the paperwork is in there and it's completed. And then I also recommend you document, so you maybe keep a spreadsheet or something for why you're sending the deal back, and then who the responsible parties are, so who the finance person. And so what'll happen is you'll start seeing a trend. And not only that, but they don't like getting the deals kicked back. A lot of times they like to have the office fix the problems. That's what the office is there for in their mind, in a lot of minds. And it'll fix that problem quickly. You'll find out who the culprits are, and then they're not going to want to be known as the ones who are always having their deals kicked. Anyway, I found that to be really, really effective. You clear up problems right away there. The next one is the 2 power of attorneys. So that's for each person on a deal. And the reason I always liked switching to 2 is because people make mistakes. And like I know here, if the clerk office makes a mistake when they're processing the paperwork, or there's a mistake anywhere along the line, doesn't matter. The old power of attorney has already been used once. Even though the clerk made a mistake, they're going to want another one. So it's always, again, not having to contact the customer again is really, really huge. they're happy with their car. They don't want to hear from you about needing more paperwork. So that's a really big one. And then this third one, again, as I mentioned earlier, this one really bothers me, the trade payoffs, because I just think it's just a lot of just not taking the necessary time. So what really should happen is a salesperson should be sitting down with the customer and contacting the bank and getting the payoff amount, you know, the date that payoff's good till, the per diem amount, and having the customer sign it. I don't know how many times I've seen trade payoff sheets come up, no customer signature, just a round dollar amount. Sometimes the bank is wrong. And so it ends up being, you know, the office ends up chasing this work down, like I mentioned earlier, and chewing up a bunch of time. It should happen at the sales desk, with the salesperson, with the customer, 100% sales. Okay. The other one, the trade title, and verify who's listed as owner. So a lot of you, as you've probably seen, you know, grandma gives her grandson a car, grandson trades the car in, title's in grandma's name, paperwork is all in grandson's name. We have a problem. So those problems can obviously be fixed, but they need to be addressed at the sales process. So training your salespeople to match the names on the contracts to the names on the trade-in, and making sure that all the parties involved are listed or are represented properly. And again, not having clear title, going back to the customer can just be really an arduous process, and we want to try to avoid that as much as we can. So doing that work up front, you know, you're either going to have to do the work up front, you're going to have to do it sometime, so why not do it up front and then keep the customers happy. And then another one is the due bill, so completely filling it out. As I mentioned, sometimes they're missing the amount, or sometimes they come up blank, which I never understood that, but they need to have, what my recommendation is, should clearly state what we are promising the customer, and it should also have a dollar amount, and that dollar amount should be set up in the deal. I didn't put this down, but another best practice I've seen is where they will send the biller, whoever's posting the deal, will send a copy of the WEO or the due bill to the service department. So whoever handles it in the service department, they will get a copy of the due bill. And then that way, when the customer comes in, they already have the due bill copy, and helps the customer, you know, keeps them happier. You're not running around trying to figure out what's going on. And so if you can have that zero tolerance, you can kick those deals and send that stuff back and make sure that it's right at first. You know, eventually, we're not zero tolerant forever. I wouldn't be. It's just trying to get it straight. And then if it starts getting out of hand, then you have to go back to resorting to zero tolerance. And then the final thing on here was use a checklist and actually complete it. So whenever, it's funny because usually I'll ask people, do you use a checklist? Oh yeah, it's on the deal jacket. And it's hardly ever filled out, or a couple of the boxes are checked. I've only seen one or two dealers that actually have a checklist that they use, they fill it out, they sign it. I mean, you should be doing that, in my opinion. And so I would recommend trying to move to that area. And if you're going to leave it on your deal jacket, the ones on the deal jackets, the ones I've looked at, they're very basic. They're missing a lot of information. So you may want to reconsider adding items to the deal jackets checklist if you're going to continue, if you want to use that as your checklist. Okay, and then a couple other deal considerations I just thought of was, you know, getting an owner's manual or 2 sets of keys. But, you know, this is just part of the sales process. They just popped in my head, and I figured I would just share them with you. They're really not related to the deal flow, but, you know, trying to get those. And so I also want to bring this up because I wanted to talk about spiffs for salespeople. So, you know, there's a school of thought, well, you know, you spiff them if they get the owner's manual. You spiff them if they get 2 sets of keys. or you spiff them, and so what I mean by that is you give them a little bonus, maybe a $25 bonus because they were able to get the old owner's manual, or they got both sets of keys, so you give them a $25 bonus, or they get the title, and the title is clean and matches, and that's part of it. That's one school of thought. The other school of thought is, wait a second, this is their job already, so why should we spiff them for doing their job? Whatever way you want to think about it, I just wanted to make that out there as something to put in your head, is whether or not you want to do that. But again, addressing these, I guess the key here is addressing the items that cause the most pain or future expense, and getting those done up front, getting them done right at the inception, and then that way you don't have an upset customer, or we have all kinds of costs that we didn't know about in the future. So accounts payable in the dealership world can be chaotic, as you know. There's invoice management. They have to deal with the factory statements, so the parts and all the charges that come through on the factory statements. They have their regular traditional trade payable check run, and then this one, again, certain things bother me, and these on-demand checks kind of get to me a bit, so they can be out of hand. So there's vendors that want checks now, drivers, that deliver vehicles, they often wait for their checks. Dealer trades, which makes sense. I mean, you're going to pick up another vehicle and drop off one, so you have to pay for it. So that one's not bad. And then the bird dogs, and those are the referral fees for customers that refer clients that end up buying a car from you. And then this one is really, really bad. The credit cards and the fuel cards, especially the fuel cards, they can really get out of hand and quickly. And so you have to be on top of these. So there's a lot going on in accounts payable that we're going to talk about here. And I'm going to I'm going to focus not on every component here, but I want to focus on the areas where if we can tighten up some of the processes in AP, we can cut some costs down. So before we get into that will lead us to our third polling question.
All right, our third polling question, true or false, is it considered a best practice to have 2 signed power of attorneys for each person included in the deal? All right, 95%
Correct
true.
answer, true. Yep, that's the correct answer. Okay, let's move on to the common issues that I've seen in accounts payable. Okay, so the common issues that I want to address are so duplicate payments. So usually a training issue. What will typically happen is the invoice number may come up as a duplicate. Maybe it may or may not, and so they'll put an A at the end of it so that it'll work. Or they may use a different number that's not the invoice number, and so it ends up getting paid anyways. And so that issue, obviously you're tying up your working capital with extra payments you don't need. Missing invoices. So this happens a lot when you don't have a streamlined process of how you receive your invoices. So they come in many forms, mailed or emailed or faxed or delivered in person or whatever, but you end up with missing invoices, missing credit card receipts, especially fuel. Some of the problems here, obviously the expense doesn't get charged where it should. And then unauthorized payments, so the invoices are not approved, and so they end up making a payment for something that we shouldn't have. And I'll talk about what I mean there in just a bit. Those are the 4 areas of accounts payable I wanted to address today, and maybe talk about some best practices. So duplicate payments. So again, as I mentioned, it's probably a training issue. The way you can fix that is to implement a uniform policy for invoice number entry. So there's a certain way you can do it. However you define what your invoice is going to be, just so that it's consistent. Obviously, most of the time the invoice number is all you'll need right off the invoice, but and then monitor the spending by trend, by vendor and/or expense account. So there's some really cool tools in the DMS. I really like CDK has vendor spend analysis you could do, a trend analysis, or expense analysis as well. And those are really cool reports that you can pull out of there that help you identify duplicate payments or even missing payments. And so most of the DMSs will have tools you can use to monitor that. Missing invoices. So what I found is that you require all your vendors to submit invoices to one centralized location. And I've seen probably the most effective I've seen is using an email address. So having everything sent to one email address, and then that way the approval we know all the invoices are there, and then we can approve them however we want. Again, missing invoices. We don't have a whole lot of opportunity to pick up discounts, right, from paying in like 210, net 30. We don't have a whole lot of opportunity in that, but there are some. And if we're getting late invoices, we're not picking up on those opportunities to earn those discounts. And then missing credit card receipts, the fuel. So what happens is you end up not knowing if you end up missing receipts, now where are we charging the fuel? Is it getting charged to the delivery expense? We're not charging it to the stock number, so our gross is off. We're paying commissions on a higher gross than it should be. Those type of things. You just not getting expenses in the right spot. So the best practice I've seen especially with fuel cards. Now with credit cards, you can typically have the AP clerk handle that. They can stay on top of that. But the fuel cards, because it's continuous all day long, and all the different people that use fuel cards, salespeople, technicians, doing PDIs, porters, whoever you have, assign one person responsibility. And the best I've seen is when you have the receptionist who handles it right there. She's in the showroom. He or she is in the showroom. They control the card. I've seen it where they require that you turn in your business card before they hand you your card, or they can do a sign out sheet. And then when you return the card, it comes back with the receipt with the stock number written on it, and then they can document it however you want to. I've seen where they use a receipt book and attach the gas receipts in that receipt book, or you just have a document where you can track all the files. But either way, it should be one person, and I don't recommend it being a sales manager or anybody in the sales department. And it's not a knock against them. It's just that they're so busy running around, and a lot of times they're not going to be diligent about getting those receipts back. So you have that one person that's going to be there from bell to bell, or you'll have a receptionist there, after the first shift's over. So you'll have somebody in that capacity. That's where I've seen the best. And the reason I spend so much time on it is that is a major problem I've seen in dealerships with the fuel receipts. And then unauthorized payments. So I always when I was a controller, I had all my invoices, I required them to be signed. And it didn't matter if it was a gas bill, or if it was, True Car, or if it was dealer socket. Because what happens is, here's what I found. Let's say you made some changes to your dealer socket subscription, and you've cut some things out you don't want, or maybe you've cut some things out of your DMS that you no longer need, and so your costs have gone down. Well, your AP clerk, every month, we've got the same dealer socket bill that comes in every month. Well, she doesn't know that they made a change up in the front office, and maybe at dealer socket, they didn't put that change into your invoice, and so what happens is you end up paying for services that you no longer have. Where if the AP clerk would have just forwarded that dealer socket bill to the sales manager, they would have said, wait a minute, this is not right, and you can correct things. It's a lot easier, as you know, to correct things up front than it is to try to go get money back after you've already paid them. So that's a big one. And then I always liked giving the general managers the electric bills and the water bills and stuff, just so they could see what kind of expense. And the other thing I recommend sharing with your salespeople are their expenses. They're the managers. They're semi-fixed. Give them a breakdown of their semi-fixed expense. You could even just give them the raw data and just show them it. Because I always like this story. I did that at one of the stores I had where we sat down with the managers and we went through all their semi-fixed expense. And the sales manager came back to me and said, I had no idea we were spending that much money on helium. And he would have never have known that if he hadn't seen all the invoices and gone through all the expenses. So you can really, it helps the managers take ownership. And we ended up cutting the helium expense. I forget how much it was, but it was somewhere, I want to say in the neighborhood of $500 a month or so, and just helium we were spending. So again, nice way to find expenses and cut costs. And then the final thing I have listed here is what I call a check signing party. And I think you should do this periodically regardless. And that's where you sit down with all the checks and you sit down with all the managers and you go through and you talk about every invoice. And you're going to find a lot of stuff you're going to be able to cut out, a lot of areas of improvement. So I really encourage you to do that periodically. You don't need to do it all the time, but maybe a couple times a year, and that'll get everybody engaged and you're all watching expenses together. One thing I didn't put on here is I'm learning about it, but some of my clients have used the invoice pay function on CDK. That's like an application where they actually will submit payments to vendors on your behalf. So they go through and identify vendors that will accept ACH and or credit card payments. And then what they do is they facilitate getting those lined up. And then the software helps you go in and pay the bills. You can still set it up so that the authorization process is however you want it to be. But what's nice is the payments are made. You're not cutting checks. One of my clients, actually, it's going to become a profit center for them because they're going to end up getting more back in the credit card rebates than they're going to spend in postage and those costs as far as that. Obviously not the payroll clerk, and they were actually able. My one client was actually able to cut their payable staff, and they have now just a one person does payable and receivable. When I first started working with them, they were using they had a full-time payable clerk and a full-time receivable clerk, and then another person to support them. So they've really been able to take that technology and use it to their advantage. So, but that's what I have as far as some best practices in accounts payable and deal flow. And I want to get into some of the consulting services that I offer. Okay, so let's go on to the consulting services. For those of you who aren't familiar with my background, I am a CPA. I have a lot of experience working in dealerships. I was a service writer, a service dispatcher. I started out as a porter, a new car prep manager. Did that, and then I went to school for accounting. I actually went to school at Northwood University for dealerships. Got an AA in automotive marketing, and then went and got my master's in accounting, and then used that, and then I parlayed that into a CPA career working with car dealerships. When I got out of college, I worked with a big regional Midwest firm that dealt with car dealers and that specialize in car dealers, Plant Moran. Many of you have heard of them, I'm sure. And so I cut my teeth there for a couple of years and then came out to Vegas and joined up with a small firm that was the premier dealer firm in Vegas that ended up merging into Eide. And so I spent some time as a controller for a large dealer group, and also as I spent some time with a smaller group with a bunch of other type of entities, but it was I was basically office manager / controller / CFO, so I kind of wore a bunch of hats and dug in deep. And so I've been on both sides of the fence. I understand the challenges on both sides. So I like to help out dealers whenever I can. So with that being said, I joined Eide back a year ago. I expect it'll be a year on July 30th when I came back to the firm, and we started this consulting practice. So just to give you some of the services that we offer. So there's something called an operational review, and that's really where I can come in and look at your books. Basically, it's just a deep dive into your books, and how deep you want to go depends on, again, what areas of concern. So if you have, like, I have had clients that said, come in and help me with my AP, or come in, I'm having a problem with my warranty schedule, payroll. I've had clients ask for payroll help, training office managers, that kind of thing. But let's get back to the operational review first. So the operational review. So if you're having a problem with an area, your factory receivables or your warranty claims or things like that, I can come in and look and dig into the schedules. And then on the other side, if your P&L, if you have concerns with your P&L, I can dig deep into those. Again, being on both sides, I understand how everything works, how the nuances work, and so I can really provide some value. And then again, it's how deep do you want to go? If you just want an overview, I've had some clients just say, just look at my schedules and give me some feedback. And I've had others say, dig deep, I need some answers. So whatever level, this is what's nice about this is we can tailor it to however you want it to work, however you want it to look. And then some of the additional services. So the bank rec, like I talk about that, a proof of cash, which is basically a bank rec on steroids. I can help with any type of physical inventories, parts testing, fixed asset inventory. That's an opportunity. I know a lot of stores have a lot of junk on their fixed asset schedules, and they're still paying property taxes on it. So I can help come clean up that stuff. Flooring racks, benchmarking. I can do trend analysis. I mean, again, we can tailor it however you want. Lately, I've been tasked with training, helping train people that are inexperienced or just need a little extra boost. So I can help in those areas as well. Okay, so the way that consulting services have been working lately is the most effective approach I've seen has been the 2-day on-site visit. So basically, I had a store ask me to just come in and give an overall evaluation. It was a smaller store, so I felt comfortable in that I could do that in 2 days, and so I went up and visited them, and basically I'd sit down and go through and interview all your employees. All the employees kind of just observe, watch, see what's going on, cover every department. So I usually speak to all the managers and usually a few of the rank and file, because I like to get a feel for everything. And being on site really helps me get a feel for how the dealership operates. It's just, as you know, you kind of get more of a feel there. So those are the most effective consulting approaches that I've seen. But again, we have other ways of doing this. So I can remotely connect to the dealership's DMS and review schedules, like I mentioned earlier. It's really easy to do that with DealerTrack. And what's nice is you don't have to deal with travel costs. So if there's something specific that you want me to look at, I can log on. I do have CDK logins, so we know we can make that. And right now I'm in the process of getting rentals. So if you use any of those 3 DMSs, I can remote into your system and pull any data you want or look at anything you want. Talked about office manager, controller training. So that's fun too, but that's the type of thing where I probably need to be on site, and I can come up and spend 3 days or so, or a week, or however long you need. But teach the office manager how to run an office, how to look at the schedules, and how dealership works. And then another one I can do is to review the factory financial statements and provide feedback. So I can't do anything with a tax return, and I can't do anything with a a non-factory financial statement, but if you can provide me a factory financial statement, I can provide you feedback. So what does that mean? What's the cost and so forth? So my fee right now is on these 2-day visits is $250 an hour, and we can max them out. Again, we can tailor it however you want, depending on how much work you're looking to get. But usually, what I'll do with a 2-day visit, $5,000 max, $250 an hour, not to exceed $5,000. So that'll cover 20 hours worth of work, and that'll include the whole visit. And then we have a little exit meeting talking about my recommendations and what I find. The other remotely connect, and then so in the 2-day visit, then that would also plus travel costs. My travel time right now we're absorbing that, so you won't have any travel time, but the travel costs, the airfare, the hotel, and as with clients, I've had some clients put me up in a hotel that's near their office or near their dealership because they have an arrangement with them. They give me a car to drive, or I just rent my own car. However, again, this is very flexible, so we can work it however you want to work it. The remote connection would be strictly a $250 an hour type deal. Typically, I like to do that as an 8-hour engagement. That way, again, it depends on what you're looking for. If you just want something simple, something real quick, we can tailor it however you like. Office manager, controller training, and that's again $250 an hour. But the best one, the last one, I'll look at your factory, give you some factory financials, and give you some feedback, and I'll do that for free. So if you have a client or if you're a dealer that's looking, just some feedback, I'll be happy to give you that. Perfect. Yep. And I got a little ahead of myself there with the webinar thing slide, but I did save a little time for questions. I was hoping that if anybody had any discussion points or anything you wanted to cover, we can do that right now. If not, we can conclude this. And you have feel free to reach out to me at any time. I'd be happy if you have anything that pops up afterwards. My contact information should be at the beginning of the slides here. Yep. So you can reach out to me with any questions. Be happy to answer. Give me a call. But thank you all for attending. Appreciate all the attendees. Thank you very much.
Awesome. Thank you all so much. And we will have, oh, looks like we have one question that came through. Let's see here.
Sweet.
How many people in a dealership are typically empowered to write checks?
Usually it's the entire office. They're empowered to write them. So usually everybody in the office can cut a check, but it's signing them is limited to 1 or 2 people. So like title clerks need to cut checks to get the fees, right? So they'll need to cut. It seems like a control issue, but if you have the right signature process in place, you should be okay. But the reason, if you think about it, a title clerk needs to cut a check to go to the clerk's office to get tags, for example, for the vehicle. Do you want to have to go to the office manager every time to cut a title check? A biller posts a deal, they have to pay off the trade-in. Again, is it okay to have them cut a check every time, or do you want a manager to have to do it? So that's why I know it's a little bit of a shock from a control perspective, but as long as that's why I really encourage the invoice, all the invoices get signed, check signing parties, having the check signers actually look at the invoices before they sign the checks. Those will mitigate the risk that might result from having so many people able to cut checks.
All right. Well, that was the last question. So we do appreciate your time.